Thank you very much. And first of all, I appreciate being here. 안녕하십니까? And thank you for including me. 감사합니다. I was here last in September for Korean Blockchain Week. We were wearing t-shirts and hoodies. And it's actually incredible that you've pulled this amazing group together, and I congratulate you. 축하합니다. So I'm here as the Chief Executive Officer of a NASDAQ-listed public company called SharpLink. Most of you would never have heard about it, but hopefully I can explain a little bit about our company, but more importantly, what I think the future of financial services technology will be, and it'll be based on Ethereum. So SharpLink is a digital asset treasury company. We were founded in June. Our treasury asset is not Bitcoin, it is Ether. Ether is the token that secures the Ethereum blockchain. And for those of you who may not be familiar with Ethereum, Ethereum is the second largest crypto network, second to Bitcoin. The difference between Bitcoin and Ethereum is Bitcoin does one thing remarkably well. It stores and moves Bitcoin. Ethereum is also a cryptographic network, but it actually is programmable. And you're starting to see large amounts of financial activity programmed on Ethereum. So my company buys as a treasury Ethereum tokens called Ether. Since last summer when I joined as CEO, we've raised $3 billion US, and we've used all of it to buy Ether, the token. And we make it productive because Ethereum is a yield asset. And so we call it a treasury company, but with active management, because Ethereum can provide yield in a way that Bitcoin cannot. And we have institutional leadership that has both traditional financial background as well as deep crypto experience. And that matters when you're managing billions and billions of dollars for investors. So a little bit on my background and why I'm here. I come from traditional finance. I spent 20 years as a senior executive at BlackRock. BlackRock is the world's largest asset manager. Today it manages about 14 trillion US dollars. For most of that time, I helped scale BlackRock's fintech platform called Aladdin. Aladdin is the largest portfolio management and risk management system for global investors. It has tens and tens of trillions of dollars of risk assets. For the last 5 years, before I retired from BlackRock, I led its digital asset strategy. And to be honest with you, it took a long time to figure out what the role of a responsible fiduciary can play in the crypto environment. Crypto was dominated by people who did not understand institutional standards, risk management, and most importantly, didn't understand that the customers of crypto could lose money, and if they did, they couldn't meet their life goals. Many retirees invested in crypto and could not retire in dignity. So we took a couple of years to figure out what to do, and we did 3 things from 2021 to 2025. First, we became one of the largest investors in Circle. Circle is the issuer of USDC, the second largest stablecoin, and we were the responsible asset manager for over $70 billion of their reserves. And in return, we learned how the future of money movement was going to come not to consumers, but was coming to people in this room, to the largest institutions and governments. Second, we knew clients, wealth managers, pension funds, and direct individuals wanted to own Bitcoin and ETH. They did not really want anything beyond the 2 largest cryptocurrencies. They just were not able to buy it in custody accounts or wallets. So we were the first in the world to get approval from the US government, and the SEC was quite hostile, but eventually allowed us to launch 2 ETFs, exchange-traded funds, in 2024. Those 2 funds, a Bitcoin fund and an Ethereum fund, became the largest crypto exposure funds in history. We raised about 100 billion US dollars in a responsible manner under a fiduciary standard. And then finally, actually most importantly, is tokenization. So we worked for Larry Fink, who's a pioneer in asset management, and he had lived through the electronification of equity markets. He had lived through the electronification of bond markets, and he realized that owning a security or a fund or real estate or any other financial asset in tokenized form was better for investors, was better for the markets, and he believed we should focus on tokenization of assets. But for years, people had been tokenizing projects with no utility. We built a yield token called BIDL. It was a 4% yield token built on Ethereum, and it became the largest tokenized fund in the world, not because of our reputation, because it did two things that had never been done before. You can own this token and get yield, and in an instant go back to a stable coin when you need it to transact on chain 24/7. And importantly, this security token that offers yield is now accepted as collateral in crypto exchanges. So you don't have to sit in stable coins and earn zero yield. You can stay on chain, earn yield, and pledge it as collateral. This was the first time in history we provided investors that utility. So why did I retire from BlackRock? I told my wife and children I would stop working for 6 months. 6 weeks later, I'm a CEO of the first Ethereum digital asset treasury. The reason is, when I was at BlackRock, I had a front row seat on how broken the financial system worked. It was broken. In what other system in the world would someone be willing to sell a security and wait 2 or 3 days to get their cash? Or want to buy a security and wait 2 or 3 days? Consumers expect instant movement. They expect their iPhone or Samsung phone to be natively programmable with an operating system that was a pleasure to use. Unfortunately, that's not the case in traditional finance, and it doesn't matter what country you go to. But we are going through a time of profound change, more change than I've witnessed in my 54 years of my life. What people forget is that every economic transaction requires trust. You don't really think about it in your consumer life, but if you're an institutional investor who's transacting on behalf of clients, if you're a bank, it takes trillions of dollars of human trust to make our system work. If you think about it, when people trade with one another, they accept counterparty risk. In the US for 1 day, here in Korea for 2 days, in some markets for 3 days, there needs to be some form of human trust or capital used to make sure that your counterparty would deliver. You take overnight market risk or 2 days risk, or even over the weekend, you're exposed to somebody else's credit. In the US alone, we spend $9.3 trillion on trust in the financial system because of delayed settlement and lack of standards. Execution is slow, settlement is slower. People have to reconcile millions of private databases when they move assets to one another in institutional. Consumers would never accept that. And the operations are very, very opaque. You don't really know where you stand with your counterparty. You have to really spend a lot of money to understand where your transaction is so you can manage its risk. And we know for sure, having lived through multiple financial crises, that the opaque system is subject to concentration risk and single points of failure because you rely on central counterparties. I think we're at the moment where Ethereum, again, the second largest blockchain, is starting to fundamentally rewrite the infrastructure of all of finance. This could not be done with prior technology. Ethereum has been building for this moment for 10 years. And what do I mean? We're talking about networks beyond borders being transactable. Today, you have to trade your local fiat currency for a security. In the future, you'll be able to trade any asset for any asset. And importantly, today in the US, for example, you can only trade equities Monday through Friday from 9:30 in the morning to 4 p.m., and then you wait all weekend for the markets to open. What Ethereum and the blockchain and tokenization will promise is 24/7, 365-day-a-year trading of assets. You would have heard in the last 2 weeks, the largest stock exchange in the world, the New York Stock Exchange, announced a program where tokenized equities can trade 24/7. The NASDAQ, where my company is listed, is going to allow trading 23 hours a day, 6 days a week, because that is what consumers are looking for here. And most importantly, you will have less intermediaries. You will have less clearinghouses, less centralization. It'll happen on a single unified ledger on the Ethereum blockchain, which again serves as a decentralized trust layer. Fees today and friction is very high. In the future, fees will be nearly zero to transact, and anyone can participate from whatever wallet or account they have. You can flow value between institutions and not be trapped within your one geography or your one exchange. We are moving to open digital networks, and it's not going to happen on the current infrastructure. So why do I believe that Ethereum, more than any other of the hundreds of blockchains, is going to be the winner, is going to be the trusted ledger for the future of finance? It's because it is the most trusted and secure. What do I mean by that? Ethereum is not a new technology. It launched in July of 2015. After Bitcoin, it is the oldest and most stable and most mature chain in history. It also is the most secure. It operates on something called a proof of stake network. So you essentially own Ether, the token, and you stake it into the ecosystem to secure every transaction cryptographically, and in return, you get a reward from staking that risk. It has over 1 million validators who are there to secure transactions to make sure they're finalized appropriately in seconds. The second largest chain, Solana, has less than 1,000 validators, and it's shrinking. It operates across 84 countries in a fully decentralized manner. There is no single owner. There is no single point of failure. And it has been around for 10.5 years, and it has had zero downtime. I challenge anyone in this room to find a database that hasn't gone down or a system that has never gone down in its history. It is secure. It is also the most liquid. All morning, you've been hearing about stable coins and tokenized assets and decentralized finance. If you look at where the high quality, high value transactions are occurring, they're happening on Ethereum and its ecosystem 10 times more than the next largest chain. And I will tell you, having lived in the largest financial institution in the world, who cares about clients, who cares about risk, who cares about security more than anything, they want to participate on systems that are trusted, secure, and have liquidity. And finally, look at who's building on Ethereum. You know, Larry Fink announced in Davos 2 weeks ago, he's my former boss, that all assets will be tokenized. Today, there's only about $30 billion of tokenized funds. You heard in one of the introductory speeches that Boston Consulting Group is predicting there'll be almost 12 trillion by 2030. The largest crypto native providers, the largest asset managers, and the largest DeFi platforms are largely building on Ethereum because it's trusted, it's secured, and it's liquid. So what is Ether? You've all heard about Bitcoin. Bitcoin was the first crypto token. It does a great job being a store of value. It is deflationary because it's scarce. And actually, importantly, for most of its history, it's acted almost like digital gold. At times of stress, you move into Bitcoin. Unfortunately, that didn't happen in the last few weeks. Ethereum is also similar in that it is a cryptographic token. It's the second largest after Bitcoin, and it is a store of value and at times deflationary. But what's interesting is, unlike Bitcoin, which is minted and mined, but has no yield, it has no productivity, it has no return, the Ether token is used to secure transactions on the Ethereum network, and in return, you're given yield or staking rewards of about 2.8% a year. So it's a productive asset, and that compounds over time. And most importantly, the token provides the native security for the network. That's why there's 1 million validators in 84 countries leveraging Ether as the token. And as trillions of dollars of financial assets move from traditional infrastructure over the next decade onto Ethereum and other on-chain ecosystems, the demand for Ether tokens to secure these transactions will only grow. So why do I say there's a decade-long Ethereum opportunity? Why did I leave the world's largest asset manager when we were having tremendous success? Well, I'm a very mission-oriented person. I have amazing parents who taught me the values of integrity and humility, and to leave the world a more perfect place than when you joined. And I feel like my mission, besides being a great father and husband, my mission has been to serve as a bridge between traditional finance and the future digital asset ecosystem. At BlackRock, we built the largest bridge to bring institutional capital to crypto, and we taught each other the language. We're now at another moment of an opportunity that I don't think we'll witness again in our lifetimes. We call it the Ethereum opportunity. And what we're seeing is an absolute acceleration of digital adoption. There's about $305 billion of stablecoins today. Over 65% of it are secured and settled in the Ethereum ecosystem. Today, there's only $30 billion of tokenized assets, and most of those are in short-term treasury funds. We're going to start to see every public equity tokenized. We're going to see funds tokenized, not one at a time. Listen to the leaders at Fidelity and Franklin Templeton and BlackRock who are telling you as loud as they can, they're going to tokenize all their assets, not one fund at a time. And importantly, this idea of high-quality decentralized finance, where you can go into the crypto ecosystem and borrow your securities, lend your securities, take out loans, swap assets. This is becoming a multi-hundred billion dollar source of liquidity, not just for retail or crypto degens, but for the largest institutions in the world. Most of this is being built on the Ethereum ecosystem. And it's really interesting, and I feel like it's a great time to be here. We've all observed the price of Bitcoin and ETH and many tokens drop over 50% since October. There's been a deleveraging, there's been a rotation out of risk assets, there's been a rotation out of dollar-denominated assets. But interesting, we're at a moment where I feel like crypto and tokenization and the Ethereum opportunity has actually never had better fundamentals and tailwinds. Why? Institutions have been experimenting for years. Jamie Dimon was not a fan of crypto. They are launching blockchains and stablecoins on Ethereum. Scott Bessent, the US Treasury Secretary, is basically telling you out loud that stablecoins, US dollar stablecoins, are a strategic priority for the US. Why? Because they want more of the financial system to be dollar denominated. It's now going to become imperative for countries like Korea, Hong Kong, Abu Dhabi, Japan to build their own stablecoins to make sure more of the financial services industry is locally sourced and locally denominated. Let's not forget, when China is stopping to buy US treasuries, Tether and USDC Circle together own about $270 billion of treasuries. They're the 12th largest creditor of the US government. This is a strategic imperative, and it's happening on Ethereum. And then finally, in the US, we now have some regulatory clarity that stablecoins are acceptable. We are soon going to have the Clarity Act, which is a market structure bill, explain how exchanges and banks and stablecoin providers can interact. What is a security? What is a commodity? And I'm encouraged by all the speeches here today that soon Korea will have similar clarity. So there's tailwinds despite all the market volatility. Don't get distracted by the price. Focus on the value that's going to be created from these ecosystems. Larry Fink in Davos had this exact slide up that he shared with the world's largest investors and regulators. He called Ethereum the toll road or the highway to tokenization. If we believe that trillions of dollars of financial assets are going to be tokenized, this is the toll road where they're going to be secured. And you could see in blue tokenized assets by blockchain. You don't even have to look at the other colors. It's happening in the most trusted and secure network. And you're starting to see stablecoin transactions outpace crypto trading for the first time. For most of crypto history, it was all about crypto tokens. Now you're seeing stablecoin transactions exceed $1 trillion. If you look at the crypto environment, stablecoins, Bitcoin, ETH, and thousands of tokens, it's only a $2 trillion market capitalization. At its height, it was $4 trillion. There is $700 trillion of financial assets that are ready to be tokenized. Real estate, bonds, equities, commodities, project finance, AI, carbon credits. So we're at the early stages of what is going to be a mega trend, an institutional adoption supercycle. And SharpLink is built to give investors exposure to that opportunity. Some investors cannot buy spot Ether. Some investors cannot buy the ETFs, including the ones I launched at BlackRock. And for many investors, they're able to just go onto NASDAQ, buy a public equity in an instant, and you get exposure to the wealth accumulation from owning ETH. It's very volatile, so it'll go up, it'll go down, and we're a professional management team who can optimize the yield of your Ether treasury. We are meant to be an institutional platform. We're not here for speculation. We're not here for gambling. And importantly, the reason why I think it's important for this group to be here is I hope when I look back at my career at BlackRock or my career at SharpLink, I won't remember what we accomplished. Everyone in life has success and failure. I hope I remember how we did it and who we did it with. And by that I mean raising standards to join this community, not lowering standards for crypto. We need to work together with our regulators and financial services company and retail to explain the opportunities, but equally to explain the risk. And I think we need to do it in a manner that our children and our children's children will be proud of us, with humility, with risk management, and most importantly, by always doing it with a series and a thought of integrity first. You heard some people earlier talk about many startups in crypto are only focused on the price of their token. And their second focus is building a product that has great utility. I'm proud to say Ethereum is building a product, has been building quietly for 10 years, a product that is not flashy, that is not focused first on the price. It's focused on delivering utility and value. And that is what we should be proud of. And get out of the business of trying to pump tokens or speculate. This is serious business. If people buy these assets and they are not built appropriately, there are people who are not going to retire in dignity. So it's a huge responsibility, and I accept that responsibility as a CEO of SharpLink. So again, I want to say thank you. I think we have time for a couple of questions. But first of all, 감사합니다. 축하합니다, and 안녕히 계세요.